Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo. The unloved record-setting market that just won't quit, entering uncharted territory on a daily basis. What's next for stocks and what's the best way to invest right now? The foreign policy expert who says we need to fix what's broken at home first, and why the biggest threat to America is within our borders. It's not what you might think. Plus, Maria Bartiromo's secret sauce, the celebrity chef's expanding empire and his recipe for success. On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
Here's a look at what's making news as we head into a new week on the money. It is the stock market rally that just won't quit. For the first time ever, on Tuesday, the Dow Jones Industrial Average closed above 15,000 and then continued up again into more record territory on Wednesday, both days setting all-time highs. The S&P 500 also hit an all-time high on Tuesday, closing above 1,600. It climbed again on Wednesday. The markets took a breather on Thursday, but rebounded on Friday. We're at the tail end of earnings season. Disney and News Corp both had better than expected earnings, as did media company AMC Networks. Another sign of a comeback in the housing market, meanwhile, foreclosures fell to the lowest level in 6 years in the month of April. They were down 20% from the previous month and 32% from a year earlier, according to Realty Track. If you love YouTube, how will you feel about having to pay for it? Parent company Google announcing paid channels this week as it looks for additional revenue from its 1 billion monthly YouTube users. The pilot launched this week with 30 partners and 50 channels, including Sesame Street and UFC. Subscriptions start at 99 cents per month. Well, it seems every time you turn around, the market is setting all-time highs again and again. So is it too late to get in and buy stocks? What happens next? Joining me right now to talk about investing is Russ Kostrich. He's Chief Investment Strategist with BlackRock, and Michael Yoshikami is Destination Wealth Management founder and CEO. Gentlemen, good to see you. Thanks for joining us.
Thanks, Maria.
So, Russ, another record setter of a week this week. The Dow, the S&P 500 passing big milestones. Dow 15,000, S&P 1,600. Are you surprised by the strength of this market?
I am surprised. I mean, we've had a huge rally so far. And what's really interesting is not just the amount of the gains, but the type of the gains. And when you look at really what's led this rally, the type of company that's done the best, they've been the so-called defensive names. Consumer staple companies like Procter & Gamble, utility companies. And what it suggests to me is that investors are coming back into the market, but they're doing it in a very tentative way, dipping their toe in the water and buying the companies and the stocks that feel safest.
Yeah, you know, one thing about this rally is that everybody questions it. I mean, every time you turn around, someone's saying, well, the sell-off is around the corner and the sell-off is happening. Michael, what about that? It's such an unloved rally. And, you know, technical strategists will say, that's a contrary indicator because everybody's questioning it. They think the market keeps going higher. So how do you characterize the earnings season that's almost done and the fundamentals that are driving this market?
Well, it has been, as you've mentioned, an unloved market. But, you know, earnings have actually been fairly good so far. The numbers, in terms of the current numbers, have actually been pretty reasonable. What's really been telling, I think, is future earnings guidance for most companies has actually been pretty conservative. It's interesting, if you really look at what's happening to the market right now, you're starting to see money rotate not really out of fixed income or bond assets. You're seeing it rotate out of cash positions. And investors are saying to themselves, what do I do? Do I move into bonds, which could potentially be negatively affected if interest rates rise? Do I stay in cash that pays basically nothing? Or do I take my first step back into risk assets? And risk assets are really the defensive, dividend-oriented names. In a way, these have actually become the new fixed income assets that investors are moving towards. I think that's what's driving the market.
You make a great point. What are the alternatives? If interest rates are at rock bottom levels, why would I want to be anywhere else other than risk assets or stocks?
Well, I don't think you really have a choice. And I think that's what the Federal Reserve has really been trying to do over the past few years with their quantitative easing policies, is to push people into assets that are more risk assets. You're looking at a 10-year Treasury right now that pays 1.75%, 1.5%. You have to really love that asset for a long time because you're going to be married to it permanently, because that's going to lose money as interest rates actually rise.
So, Russ, what do you do then? I mean, let's first talk about interest rates here, because this whole discussion about rates at these levels is really one of the fuels for this market. I recognize we do have some improvements in the economy, but when would you expect interest rates to actually start moving up? That would be a real destabilizer for the stock market. Isn't that right?
Well, a couple things. I mean, first of all, in terms of rates moving up, it's going to be a very slow path. We do think rates will rise this year. Our view is by the end of the year, the 10-year Treasury note is yielding about 2.25, but it's going to be a slow process for a number of reasons. One, there's not a lot of new supply out there. The economy is still deleveraging. The Fed and other central banks are really vacuuming up much of the supply. And as the population ages, that tends to exert some downward pressure on real rates. So rates will rise, but at a relatively slow pace. Now, in terms of your second question, what does this do to the market? I think it very much matters on the way in which rates rise. If interest rates rise because people are worried about inflation, they're worried that the Fed is printing too much money, that is potentially very negative for stocks. If, on the other hand, rates rise because the Fed is gently taking their foot off the accelerator, and real interest rates are rising as part of a normalizing economy, that's not necessarily bad news for stocks, given the fact that rates are rising from an unusually low level.
Yeah, but I mean, we have seen some pretty good data points in terms of unemployment is getting a little better. But you're still concerned, Russ, about what you see as the declining strength of the consumer. Tell us about that.
Yes. Well, this is one of the reasons I think this recovery has been so soft. And again, the economy is getting better, but what we are likely to see is that consumption plays a smaller role going forward than, let's say, manufacturing or energy production. And the reason is the consumer still has a number of challenges, even when they get out from all of this debt. First of all, the population is getting older, fewer people in the workforce. That's one challenge. Second of all, and this is the big long-term challenge that predated the financial crisis, real income for most households has been stagnant for a very long time. And households have been able to defend their lifestyle through lower savings and more transfer payments from the government, neither of which are sustainable over the long term.
What do you think about investing in the market today? Michael, how do you want to allocate capital?
Well, I think what you have to do when the market is at the levels that we see now is you have to be conservative. You really have to have a mix of chasing risk, but at the same time recognize that there could be a correction around the corner if the wrong kind of news comes out. So while everyone is always talking about these defensive, dividend-oriented names have done well, and the natural tendency is to say, well, if they've done well in the past, maybe I should move into the more growth-oriented names. I think you're going to continue to see flows of assets into dividend-paying names. So I think what you do is you slowly, if you're in cash, you slowly start moving in the market and you start buying defensive dividend-paying names, global names, names that have presence overseas in emerging markets.
Russ, do you agree with that? What do you think? How are you allocating capital?
I do agree. I think there are a lot of parts of that make great sense. The emphasis on the larger multinationals. Not only do they give you exposure to the foreign markets, but they also have the advantage of being a bit cheaper than other segments of the market and more profitable. The so-called mega caps are the most profitable companies in the market today. And I also think having some global exposure makes sense. Like Michael, I agree with the dividend theme. I think it's a good long-term way to invest. Some of the best opportunities in that space are actually outside of the U.S.
Okay, gentlemen, thanks so much for the advice. Really appreciate your time today.
All right, thanks,
We'll
Maria.
see you soon. Russ Kostrich and
Thank
Michael Yoshikami. Up next on The Money, the foreign policy expert who says the biggest threat to America does not come from abroad, but from within. What he means and why he said it. And later, celebrity chef Maria Bartiromo, serving up new projects, the owner of some 24 restaurants around the globe, tells me what's on consumers' menus in the food world today. As we take a break, take a look at how the stock market ended the week. Back in a moment. Welcome back. He is the president of the Council of Foreign Relations, and he has served in 4 administrations for both Democrats and Republicans. But now Richard Haass is focusing on domestic issues and says the biggest threat to America right now does not come from abroad, but from within. He is the author of a new book, Foreign Policy Begins at Home, the case for putting America's house in order. Richard, good to see you. Thanks so much for joining us.
Thanks for having me, Maria.
So let me ask you, you say it's an intriguing title, and you say the biggest threat to America is not from abroad, but within our own home. What do you mean by that?
Well, really two things. First of all, there's nothing abroad that's anything on the scale, say, of Nazi Germany or the Soviet Union. Yes, we face challenges abroad, but nothing is existential. Secondly, if we put our domestic house in order, if we start growing at our historic rate, which is roughly twice our current rate, if we deal with long-term entitlement challenges, if we fix our schools, our infrastructure, and all the other things that are holding us back, we will have the resources, we will have the capacity, not just to be competitive, but to devote the resources, say, to military and foreign policy so we can discourage a competitor from emerging, or if one really does emerge, we can take care of it.
The issue is, though, I mean, we're always talking that money is tight. So, you know, we have infrastructure needs in this country. We have needs in terms of investing in education, investing in the country. And yet we keep hitting a wall because of the entitlements, because we don't have the money. We've got $16 trillion in debt. So how do we get there?
A lot of the things you just mentioned actually don't cost money. Infrastructure. We could do a lot of what we want to do in infrastructure with public-private partnerships. An infrastructure bank would cost the government very little. Immigration reform, that would actually generate money. We get those 11 or 12 million people on a path to citizenship, they will be more fully contributing to the American economy. We double or triple the number of H-1B visas and green cards. Look, that's where the innovation's going to come from. Or schools. Sure, it costs money, but we already spend more per pupil than anybody else. It's not how much we spend, it's how we spend. We've got to get smarter in how we spend our money.
Why aren't we doing that? I mean, you know, the problems in Washington, the dysfunction between the two parties, it's notorious. How are we going to really get at these issues?
Many of the cases we have to push back. You've got special interests, but who speaks for the national interest? So we have the AARP, 35, 40 million people. But does the average American know he's going to get a lot more out of Social Security than he ever put in? Yeah, that our current approach is unsustainable, that in many ways we're stealing from our children and grandchildren. What we have to do is educate and then push back at the grassroots level against groups like the AARP.
But there are a lot of bright spots, and I'm glad you point them out in the book. We have the biggest economy, the most open society, the strongest innovation. Does that balance out the dysfunction?
Not quite, but it's true. We have all these advantages. Look, for example, how far and how fast we've come in the energy domain. 3 or 4 years ago, no one was coming on your show saying the United States is going to be the next energy powerhouse of the world, but we're exactly that. So that shows what it is we can accomplish. But yes, we do have to get our house in order. More than anything else, it probably means getting long-term entitlements under control. We don't have a near-term problem, but we do have a medium and long-term problem. And the real question, quite honestly, is whether our politics are up to it, to making the sorts of decisions we have to make.
And I'm glad you mentioned energy, because this seems to me to be a game changer for the economy. But we're not moving on it. This is the kind of area where business and Washington should come together to actually find solutions for using the commodity that we have in this country, like natural gas.
But we're beginning to move in that direction, and I think we're going to have debates probably about exporting a little bit of natural gas. It's already making American manufacturing far more competitive. It's one of the exciting growth spots of the American economy. It's helping us in climate change. Funnily enough, we're one of the very few countries to have met the targets established by the Kyoto Protocol. Why? Because we're moving out of coal, we're moving into natural gas. It's exciting. This really is a game changer. Plus, it gives us a little bit of cushion for the next instability in the Middle East. We're not energy independent, but we are moving towards energy self-sufficiency. And again, it shows the linkages between what happens here, and our foreign policy, what happens there, and our abilities, to succeed here at home.
I love it. I think it's a great story. All right, let me get your take on what's going on in some of these hot spots of the world, like Syria, which seems to continue to disintegrate, like North Korea, which seems to continue to have more threats against the Americans. What's your take on these hotspots?
Well, North Korea, the real question is whether China is going to use the influence it has to keep the North Koreans under control. And over the last few weeks, we've seen a little bit of that. North Koreans have been barking a lot, but we've not seen a real outbreak of violence. And I think it's because the North Koreans understand the next Korean War will be the last, that the United States and the world are not going to live with this kind of a North Korean threat. Syria is more difficult. And I would simply say there the United States needs to continue to get involved, but there also needs to be a ceiling on what it is we do. At the end of the day, it's almost a business concept. The urgent can't always crowd out the important. We've got to put a ceiling on what we do in Syria. We've got to, as a result, get more involved in Asia. Think about China, Japan. That's where the real powers are colliding. We've got to rebuild America. So I'm not saying to ignore places like Syria, but what we want to do do is help, but not in the way. We don't want more Iraqs. We don't want more Afghanistans. We don't want more Vietnams. That's why I wrote this book. It's to basically give people something of a guide to figure out where do you get involved, how much. You know, we have a lot of resources, but we don't have unlimited resources. We've got to choose. We've got to set some priorities. We've got to be disciplined.
Absolutely great advice. Richard, good to have you on the program.
Thanks.
Congrats on the book. Richard Haas joining us. Up next on The Money, it is Pasta Pronto with restaurateur and chef Mario Batali. His hospitality empire dedicated to bringing La Dolce Vita to consumers. He'll tell me what he's got cooking now. And you can find us on Facebook/Maria Bartiromo. Stay with us. When it comes to dining dollars from New York to Hong Kong to your kitchen, my next guest puts his money where his mouth is. Chef Mario Batali is owner of 24 restaurants, author of 9 cookbooks. Mario, great to have you on the program.
Great to be here.
Thank you so much for joining us. So you operate restaurants all over the world. What does the dining industry tell you about how consumers are feeling right now?
Well, it tells me that they like, at the same time, they like something they recognize, and they want to take a little risk, but not one that can't be paid off. So we'll sell a risky appetizer, but not so much a risky entree. The volume says that they're comfortable everywhere we are.
So people are certainly recognizing tough economic times,
right,
and they're being selective.
Selective, but they're very much about value. At the end of the month, you look at your credit card statement, you say X dollars. I mean, there's value at $20 and there's value at $200 a head. And they look at it and somehow they figure that was worth it that day, and that's why we have return guests.
We're seeing that in a lot of industries. They want value. Right. They want to make sure they're getting something for their money.
Right. And they're not looking for some superfluous, over-expensed something. They want to do it. They want to enjoy quality, but they're a little shoppy about it, which is good.
Something that comes up frequently are some comments you made about Wall Street recently. You compared bankers to Hitler and to Stalin in a panel discussion back in 2011. Whoa. Tell me more about this.
Well, the comments were regrettable, and I continue to apologize to my friends in the finance and banking industry, and it was not how it came out, and I apologize for it.
But you're a very successful businessman yourself. I mean, you look at the fantastic performance you have had by working hard, by being talented. A lot of your customer base sees you as this big shot business guy.
And to a certain extent, I'm still buying and selling oranges and spaghetti and linguine with clams. And that's fundamentally what we do. And what we do is we buy stuff, we fix it up, and we sell it for profit. Anybody who does that, and everybody in all industries that's working hard, I'm a total fan of everybody that's doing something.
Yeah, I mean, the American dream is alive and well, wouldn't you say?
In New York City, it's stronger than it's ever been.
So what are the challenges for you of brand management? You've got to manage your brand. You're an international brand. How do your skills interact with organizing staffs as well as the obviously bread and butter, which is the delicious food and that service that
you have to really make sure that the authentic experience is within grasp of both the staff and the customer. And what you have to do is go from each place to each place, making sure they understand this is not smoke and mirrors. We are all about the bricks and mortar of what a restaurant is. We are not selling things we don't know what they are. We're not trying to jump on the bandwagon of hip modernist cuisine. We are selling the Italian ideology, and we aren't really inventing it. We're just reinterpreting it, which gives us kind of a good position because no one is ever going to question someone like Lydia Bastianich or a grandma at the table, and hopefully we can bring that to the table.
What's being brought to the table now? What's hot right now in terms of food?
Well, people are really excited and down with this whole farm-to-table movement, but it's always been farm-to-table. I don't know where it went besides from the farm to the table, but that there's a good line of understanding where stuff comes from, and the transparency of ingredients through preparation to the plate is a really big and important part of our world right now.
How are you reaching consumers today? Is it still through cookbooks? I mean, tell me about your shows, your cookbooks, and really speaking to your audience.
Well, I'm on The Chew every day on ABC, which is a major network show. That's an easy way to get a hold of it. The web presence is interesting. We're using a lot of kind of short, fun little videos and putting them on our websites and tweeting and using Facebook in a way that's still kind of new to me, although my children look at me like I'm a dinosaur. We're still just playing along in the regular
And how
world.
lucky are you to be working with family? I love the fact that your sons are cooking as well. They're out with a book. The Batali Brothers cookbook this month is Celebrity Chefdom become a family business?
I don't know if it's they really created this as a birthday present to me 2 years ago for my 50th birthday.
Okay.
And they shot it, my wife, Susie, shot it on her cell phone. The whole book was then brought to a printer. They printed the whole thing. A publisher, my publisher, Dan Halpern at Echo, saw it, and he said, hey, how could we do that book? I'm like, well, let me talk to the boys. The boys are like, maybe not, but maybe. And there it is. It's going to come out next week. The Batali Brothers Cookbook is our family kind of like little tome.
I love it. Congratulations, Mario.
Thank you.
Good to have you on the program.
Great to be here.
Maria Bartiromo. Up next, a look at the news this upcoming week that will have an impact on your money. And then Driven to Perfection, the car that got the best rating Consumer Reports has ever given. Back in a moment. For more on our show and our guests, check out the website, otm.cnbc.com. And I hope you'll follow me on Twitter and on Google+. Look for @Maria Bartiromo. First, though, here's a look at the stories coming up in the week ahead that may move the markets and impact your money this week. First quarter earnings reports are out from retailers Macy's, Walmart, Kohl's, and JCPenney. Monday, we get the last month total retail sales report. Get a look at consumer spending there. And Wednesday, the Producer Price Index will be released. The PPI tracks product inflation at the wholesale level. On Thursday, we will get the companion report, the Consumer Price Index, to see if we are actually paying more for our goods. Thursday, the number of new residential units that began construction last month will be out. Finally today, it is as close to perfect as you can get. Consumer Reports gave the best score it's ever given, a 99 out of 100, to the electric car, the Tesla Model S. The nonpartisan, nonprofit magazine cited the Tesla's power, handling, and pinpoint interior. Tesla just reported the first profitable quarter in the company's 10-year history. By the way, if you're interested, the car will set you back a mere $70,000, and it gets 200 miles per charge. That'll do it for us for today. Thank you so much for being with me. I'll see you next weekend. And next week, join a special interview. Jennifer Aniston had a style that launched 1,000 haircuts. Now the A-list actress is getting to work in the beauty industry. Each week, keep it right here where we are on The Money. Have a great week, everybody. I'll see you again next weekend.